Hello and welcome to another ACysecurities market update. My name is Alistair Schultz and I'm going to be your host through today's trading journey. Now, overnight there has been a large detail of news, nothing that we weren't anticipating, and the expectations were rather well met. But first, I'm going to give you a bit of a virus update. We have nearly 800,000 global infections now, and we've had nearly 40,000 deaths. Now, this number is definitely set to rise. The US has forecasted somewhere between 100 and 200,000 deaths in the US alone. So that figure extrapolated out to the rest of the globe is going to be a very big fallout and potentially a much greater infection rate around the world. Now, how are they going to handle that? We don't know. Are the figures accurate? We're not sure. And this is a part of the problem when it comes to this illness, is that really everything is kind of a bit of hearsay. There are some expectations, there are some models, but there is nothing definitive to say when it will end and how long it might go for, but more importantly, how much damage it's really going to do to the human race, and of course, what the fallout on the economies might actually be. Moving on from that, some of the news that we have had overnight has been rather interesting to look at. Now, Spanish and German CPI figures did come out yesterday. They did fall as anticipated, but they weren't below the expectation. So we haven't seen a great deal of movement on price charts. One was 0.1%, 0.1% below its expectation. The other one was 0.1% above. So that is going to be something that I would imagine we'll continue to see happening with people putting their models and expectations further down. But either way, it's something to take note of, especially when it comes to that consumer price index. It's imperative of how the economy is actually going. And we have to assume that in Spain, Germany, and much of Europe, there are going to be issues. We have to also assume that case is going to stands true for the US, Australia, and much of the world really in this case in point. Now, some of the next pieces of data that have come out, we've also seen the ASX, the S&P 500, the Seng, and the Kospi all sort of rise in value over the last 24 hours. Now, when you look at the charts from a technical perspective, and feel free to pull up a chart and have a look for yourself, most of these markets, and especially on the index markets, to me, they look sideways. There's no real definitive direction for the trade. There is no real up or down or trending movement. It just seems to be day-to-day movements. So moving your scale down or scope down, if you do trade on a more long-term basis like I do, might be one of the ways you can get around that sort of area and treating it like it's within its own range. I do anticipate that we are likely to see further falls in price and movements down purely because we haven't really seen the full economic impact of what's come from COVID-19. We also had Trump speak overnight, and over the last week or so, he has been very adamant about wanting to reopen the US for business post-Easter. Now, it seems he's actually taken some words of advice from his medical staff saying that, if you do this, you are going to have a serious impact on the health and well-being, plus the population is likely to have a serious increase in infections and deaths throughout the US. So he has kind of heeded the warning and is now extending the lockdown parameters until the 30th of April. I anticipate we'll probably see more lockdown stuff go in as the infection builds and Trump takes a little bit more notice of how bad it's really starting to get, and more aid and help is coming in. Otherwise, we've seen health stocks increasing in value. Johnson & Johnson, to be specific, they have talked about trying to help towards making a vaccine, and so they've seen an instant rise on price. But a number of other health stocks and companies have been seeing good growth recently because of this health crisis. Obviously on the manufacturing side of things for masks, gloves, and all those sort of amenities that might be needed, but also on the side of getting research and development funding. So as soon as we see someone get a cash injection for R&D from an external source such as the government, you tend to see a rise in price because all of a sudden they've got an inflow, an increased amount of cash or surplus cash in their bank books. So from that perspective, you see the price rise. And until they sort of start generating that product, or if product fails, then naturally the price goes down. So there's something to keep an eye on. Now, Visa and MasterCard have also said that they're seeing less consumer spending, and not just on the retail front aspect, but also in the online marketplace. So that was something that was a little bit interesting to me. Naturally, when you have people losing jobs and unemployment rates going up, people tend to spend less money on unessential items such as clothing and other varieties of entertainment devices or whatever it may be. But because it's the online marketplace, it was just interesting. I mean, naturally that unemployment figure fits into the perspective quite well. But it was still something that I found interesting, and I'm going to be continuing to keep an eye on that. Now, naturally, MasterCard and Visa have actually seen their stock prices getting pummeled the last couple of weeks, purely because of the factors of people not using as much money through credit facilities. So it'll be interesting to see how they ride this out in the long term and what they do to try and innovate or turn themselves around to increase their stock prices again as this sort of economic impact continues. Moving on from that, we have a little bit of a rumour. Now, I haven't done really a rumour mill session before, but in this one I thought it was kind of important. Apparently, from what I've been hearing across the wire, and like I said, this is all just rumour, is that there are some entities that are advising big companies who might be eligible for bank loans and government bailout money in the US are being advised to not take the funding. Now, there are a couple of trains of thought that come to me directly from this. And the first one is actually, well, if they're saying don't take the money now because there might be further economic impact, that would make sense. In the idea that, okay, if you wanted to spend that money now, then you're likely going to be unable to get a loan further down the track, and you should really ride out the storm as far as you can go and then get that loan when you get the turnaround starting to happen. Now, that would be something that would occur, and naturally rumour. Now, the other side of that could be that they're looking at a perspective of, if you are going to be purchasing your own stocks back in the company, which has been banned from government funded money, then perhaps they should be waiting until it's either re-allowed to occur and they put less restriction on it to try and help some businesses, which could happen. But more so importantly, that they use their own capital to buy those stocks back, and then when they have done so and they have limited cash surplus availability to them, then they go and get the loan, and then they can start putting it back into the economy. So I'm not sure on where that stands. It was an interesting read from my perspective, and definitely something I'm going to keep an eye on coming up in the near future. Now, for the news ahead, there's really only two things on the list that I see today that could have a significant impact. The first one is actually Italian CPI. Now, I am expecting this to fall quite a lot. Now, will it affect the euro? I think it will, though putting into account that we've seen the expectations from Spain and Germany being modified to be expected much lower. We could see the same thing with Italy, but considering the country's current state, I don't think they're going to have real good numbers. So, something to consider in the days coming ahead. The other piece of news is later tonight, about 1 a.m. Australian Eastern Standard Time, and that is US consumer confidence. Now, that is going to be important for you all to keep an eye on, considering the standard of what has been going on in the US right now. We've got stuff coming from Trump that is kind of conflicting with one another. We're getting reports and models that are saying big numbers of casualties are likely to occur. And so and then obviously you've got the situation in New York, which is unfolding at a very, very rapid rate. And as the main economic hub for the US, from a financial point of view, it's going to be interesting to see what happens for this consumer sort of reporting aspect. It's going to be interesting to hear what people actually think for the next 6 months long term. So even if the report comes back with a minor contraction, or perhaps even if by all amazing results are considered, it goes up for some unknown reason, it will be interesting to see what the people on the ground are really thinking and what their own expectations for the economy and their businesses is going to be about, because it will give us a great insight as to how they're thinking. So when it comes to these reports, the numbers aren't always the most important part. Sometimes it is about what is actually said in the report. So I would encourage you all to have a read of it when it does come out. Now, of course, if there's anything today that you would like to get in contact with me about, you have a question, or you just want to have a chat, feel free to send me an email at talk2al@acy.com. And of course, like and subscribe the video so you can get more great content from me and ACY Securities in the future. Have a great trading day ahead.